you don't jump on it and trade it right away. You have to have other corroboration from the other indicators, but that is a sign that perhaps the biggest share, the biggest momentum thrust is now out of the way. We're going to look at a couple of things, indicators about the gold prices. I don't know if you trade gold or not, but I picked that because I think whether you're a gold bug or whether you're not a gold bug, I think there's a lot of evidence that a lot of people think that the trend is up, and whether that's going to be true, manage that uptrend as much as we can. Now, you have an idea here of what the triple cross looks like, the three moving averages. The situations here where you have the the market kind of coming down to threaten the crossover. Actually, here you have a little bit of a situation, but as I say, generally you're going to stick with that green line, and we're going to show you a little bit more about how to trade that with another indicator. We're going to replace the triple cross to avoid getting too many lines on the screen, make it too confusing, and we're going to put in the vantage points predicted high and the predicted low. And when we put in the predicted high and the predicted low, just a little bit about that. This is an indicator. The other indicators all look at the past price action. Even though it's intermarket type of data that is being used, it will be turning ahead of the actual moving averages. But we need something that gives us some specific edge, and the predicted highs and the predicted lows provide an edge because they predict next day's price action and what the range will be the next day, and the high and the low will be the next day. We have on the screen here, you can see the orange line above the predicted high. The pink line is the predicted low. A lot of data, a lot of stuff to look at here, so it's probably a little bit too confusing to look at that. So we're going to break this time frame, this trend down a little bit into a couple of different time frames so that we can see kind of how we would behave. The first thing, I'm going back, you could go back all the way. As I said, you could go back to when gold was at $700 a few years ago. It wasn't that long ago, or $900. You can kind of pick your starting point, but we're starting kind of arbitrarily. We just picked 1 year ago because that's, kind of a good frame of reference that we're going to be using. And this is what, if we were looking at a more detailed view of the triple cross moving average, this is what the triple cross looks like for the first portion of that trend. We're just dealing right now with getting into the trend. And the reason that's important, in my opinion, to get into the trend at the right place is because it gives you a base, gives you the possibility, the flexibility to do a lot of different things with positions and the size of your positions and adding on or lightening up whatever it is. There are several techniques that we're going to talk about using. But we're going to now switch. We're going to take away the triple cross just to point out, again, we did have, as you can see, the little cross there, but the blue line stayed above the green line, pretty much on an even keel right here. And so you go all the way through here, and throughout most of this period, the moving averages, a triple cross, did indicate that it was an uptrend, or confirmed that it was an uptrend, which you probably could identify in this case, rather, pretty visual on the chart when you watch the prices go up. You can also see the predicted differences kind of going in line with them, coinciding, moving up and moving down, and this kind of indicates the momentum shifts that you saw in the market. But we're going to switch over here. We're going to take out the triple cross, and we are going to put in the predicted high and the low and see a little bit more detail about how we are going to trade this particular trend and what we're going to do with it. The predicted high and the predicted low, as I mentioned, is a forecast 1 day ahead as to what to do. There are several different possibilities to get into this trend at the right place, starting at the point at which we are starting. We're just going to say that we're going to be starting, as I said, a year ago in July, and we're going to find some places that we would potentially get in, first of all, to build our little base of our position, and then get ready to then maybe add on some positions, build it up into something that could really be a kind of a powerful money-making indicator. Now, the first sign we have here. Again, we're kind of arbitrarily picking a sign here, but the first one that we're going to be looking at is the predicted high on the this date right here was July 13th. The predicted high on that particular date was $917. And what we are using as our kind of our buy guideline, because gold is rather volatile, it can move, as you know, probably better than if you experience any trading in gold at all. $20 a day is not out of the ordinary, but we're going to use a difference of $10 above the predicted high as the kind of our guideline as to where we're going to get in. So that means that the predicted high was at 917. We are going to be getting in at 927. And 927 puts us in somewhere in that vicinity right there. Now that's kind of a wide line there, not a precise line, but that's kind of where we're at in terms of when we would get in the market is at 927. Now to protect ourselves against loss, again, especially at the beginning of a trade, we don't want to get started on the wrong foot. We want to make sure that we are able to kind of ride through. So we're going to keep a stop. We're going to go right back to our predicted high and put our stop at 917. Now that's our initial stop. That isn't where the stop may stay, but you are a long-term position trader if you're into this, and we're into a trend, or we think we are into a trend. We are convinced that gold is going higher, so we want to be in a situation here where we're going to stick with it. There are several places along the way where we certainly could have taken profits by using the predicted lows in this vicinity right here. We might have said, well, we could get out at a drop below the predicted low, but that's more for the short-term trader, the swing type trading techniques. You can see also there are some candles here that lend themselves to some intraday trading. So you have various trading styles that you can use, but we are assuming, again, for the sake of argument, that you are interested in the bigger fish. You want to go for the whole enchilada. You want to get this whole trend as much as you possibly can because, as I said before, you are convinced that gold is going to go higher because of all the circumstances in the world today that is going to cause it to go higher. When we look at gold and when we know that we're in at the price that we're in, our next question is going to be, how do we manage this trade as we're going along? How do we keep from getting in trouble if we are not correct? Well, I mentioned, we have our initial stop at our 917 point at our earliest predicted high that we talked about there. It survives this little spell right here, this little bout, this down draft right here in the market. And then we get another opportunity where we have a situation here where the predicted high on this particular date, July 30th, the predicted high was 936, and that would make us a buyer $10 higher at 946. And again, these are some approximations as to where that price might be, but somewhere right in there at 946. Contract number 2 that you have. You have some profits that you have in the bank as far as the previous one. I shouldn't say in the bank because it's still in your account. It's open profits. You don't, assume that you have those until you have those. But, this is what you're working with right now, trying to trade, as the market moves on up to the higher side. Again, on this particular position, you're going to maintain your stop in the vicinity at 936. Now you can modify that. You can see over here that in the